in the future, it may be true and it may be fact that all companies, all legacy companies, will switch to the ICO model, to this decentralized method of acquiring capital, to this decentralized method of distributing equity in some cases, in the cases of securities, or just tokens in the cases of utility tokens. So, little history. I talk about this a lot. 2017, massive ICO bubble, hundreds of projects all over the place, billions of dollars raised. Not very much actually done in terms of productivity, which is sad. So a lot of people had the wool over their eyes. Me too, as well. But ICOs were a thing. And there was this idea at the time that, and I believe Naval, if you know Naval Ravikant on Twitter, he's a great follow. I recommend following him. If you don't know who he is, get a Twitter and follow him. He's great. But there was this, he made a tweet one time that, I believe it was Naval. It was basically, he said, why does it make sense for you to, if you're a legacy company, it wouldn't make sense for you to remain a legacy company when you could actually do your raise through crypto. Because crypto is so much faster, it also means that you will be judged not on anything else except the actual merit of your productivity and what you are actually bringing to the market. There's no 5-year, 10-year lead time like in the traditional investing, angel investing world. And so this is one of those things that Naval said, and when I read it, I definitely agreed with it, and I think that's probably one of the best ways of putting it. I mean, one of the things we certainly learned from the ICO bubble was just how easy and effective it is to reach a wide investing audience, to reach an audience that perhaps wouldn't otherwise have the ability to invest in these things, to reach unaccredited investors, to reach people who want to invest in things, who maybe are investors, but who perhaps never had the opportunity to do so. And so it was really a breath of fresh air in that sense, that ICOs gave us that capability, it gave us that opportunity, it gave us that potential. Now, in terms of for legacy companies, we'll go through the general flowchart of legacy companies. What they will do is someone will have an idea in his garage. He puts together a few friends, maybe $50,000, and starts working on it. He works on it a little while, and then he says, okay, I need more money. So he starts doing a friends and family round. He gets his friends and family together. They put in maybe $100,000 together. Gets a little bit more money. Then he puts a team together and he realizes, okay, I'm going to do my seed round now. So I'm going to go to Silicon Valley, or I'm going to go to angel investors, usually. Angel investors first. I'm going to talk to some angel investors. I'm going to get $250,000 together. Okay, I've gotten $250,000 together from angel investors. Now I'm going to go talk to the Silicon Valley guys, because now we've grown larger. So I talk to the Silicon Valley guys. The Silicon Valley guys give me $1 million or $2 million. And time goes on like that. And this is a good model, actually. This is one of the most successful models of investing for investors. And it's also one of the successful models that has built companies like Uber, Airbnb, all of these different apps and things that we know of today. Twitter have gone through this model. However, it takes a long time. It takes a hell of a long time in order for you to reach that market. In order for Twitter to have reached their exit, I think it was 5 to 7 years or something for the seed investor, for the angel investor, that they had to wait before Twitter was actually having their IPO and they could finally exit their shares. Now, they exited at a very nice valuation. Obviously, they only paid, I believe early investors in Twitter only paid something like 17 cents per share. Twitter obviously trading nowadays at something like $40 a share, so pretty good returns there. But we see that it's something that takes a long time. So are you willing to wait 5 to 7 years for your returns? Difficult to say, especially for investors who perhaps have lower levels of money. It's sometimes the liquidity is definitely, actually I would say no. Liquidity is always better. You always want to be liquid for something. And so that's where this ICO model comes in, and where this ICO model becomes relevant and becomes powerful and becomes a much better alternative than sticking to the old traditional, let me get my seed round, my family and friends round, my angel round, my venture round 2, 3, and 4, and then I will finally do my IPO, where everyone will finally be able to get their exit, and everyone who is just a regular person can finally invest in my stock. It's a lot better if you have it decentralized or have it public right away. So this is what ICOs are really good at. So in crypto, it's a lot faster, much more effective. Now, I personally can see a world where once securities are really able to be tokenized and it becomes easy with the push of a button, let's say, I can certainly see a world where IPOs are things of the past, where no one does IPOs anymore, where everyone is always doing ICOs, where everyone is doing coin offerings that have security tokens and they're trading their equity the same way that they're doing it on the stock market, but they're doing it in a decentralized manner to thousands and millions of people. Yeah, millions of people, hundreds of millions of people even, depending, rather than just a select 1,000 people in Silicon Valley or a select few hundred people on the trade floor of the NYSE. So that I can definitely see that happening because it is just so much better in every single possible way. There's almost zero drawback to it. And the small drawbacks that there are being worked on, and it's more of a technical problem rather than a conceptual problem. People look at tokens and ICOs and they realize the potential in there. And so it's definitely something that I see is going to be happening. So the question you have to ask yourself is, if you're looking to decide whether this is going to be a thing that happens or not, would you ever, as a legacy company, would you ever limit the trading of your token, your security, your shares to the legacy markets? Would you ever limit it to those small people, that small selection of people at the New York Stock Exchange, or the small selection of people who are accredited? Or does it make a lot more sense for you to open it up to anyone who wants to get involved? As we can see from the 2017 and 2018 ICO frenzies, yes, there's a hell of a lot more money involved, and the money is going to be coming a lot faster and from a lot different sources, so you can get a much better distribution of your shares or tokens or equity than you otherwise would be able to get with having some Silicon Valley company buy 10% of your company. Maybe you don't want that. Maybe it's a lot better if you have it split amongst 3,000 people, and these 3,000 people are from all over the world, and Argentina and Chile and Asia and Germany and all these different places. Maybe it makes sense for you. And I would say generally for most companies it will, because having a lot of voices to answer to is sometimes a lot better than having one voice, but that one voice is very, very powerful in the boardroom. So I think personally companies will switch to ICOs over time. I think this is going to be something that happens possibly in the next 5 to 10 years. I think ICOs present a much better opportunity for people, for companies looking to raise money, for investors who are willing to take a little bit more risk but willing to be a lot more liquid because of it, for companies who are willing to show their stuff today and tomorrow and next week rather than next year and in 5 years and in 10 years, like in the case of Legacy. And obviously, it won't come without regulation, of course. There's going to be regulation of these things, of these securities, of these assets. But with the regulation will come all of that institutional investment, and then we will have not only institutional investment, but also investment and liquidity from the side of your average crypto denizen. This video was sponsored by Cryptowatch. Are you a crypto degen? Do you spend countless hours in front of your PC babysitting your leverage trades? Well, babysit no longer. With Cryptowatch, you can spend countless hours in the comforts of your own bed, waiting for those SMS alerts. Track how wrecked your portfolio is that week with their portfolio tracker. And you can also check the price of your favorite shitcoins. If you'd like to join Cryptowatch, there's a link in the description below. Happy trading!